Good morning, everyone. Welcome back to Morning Markets here on Monday, the 17th of August. Relatively quiet start to the week from a data point of view. So, looking back on asset markets over the last week, quite a few interesting developments there that we touched on this morning. Just looking firstly at equity markets. Equity markets last week continued to perform relatively well. And within that, we did see a degree of rotation from the more growth orientated sectors to the more value orientated sectors through the course of the week. And that was prevalent in most markets, and it actually did lead to stronger performances from UK, Europe, and Japanese equities over the course of the week. Those are areas that are more exposed to value sectors than some others, particularly the US, for example. Another interesting development last week was very much about what was happening in the bond market, where we saw bond markets, yields in bond markets back up quite a bit over the course of the week, particularly at the 10 year. So if we just focus in on the 10 year, if we look at the US, moving from 55 basis points to 69. If we look at the UK, the 10 year gilt, moving from 14, 15 basis points to 24 basis points over the course of the week. And similar trends seen in the bond market, the German bond market as well. A couple of reasons have been put forward for that move last week. The first of which in the US was the inflation data, where inflation came in slightly higher than had been expected. We've also seen ongoing economic recovery in the US, so slightly better economic data points last week in terms of unemployment and also the retail sales number on Friday. The other reason that has also been put forward is what's happening in terms of supply. So we've seen that it's quite a more supply coming through from the US Treasury, but also the likes of France and Germany have got quite sizable issuance in the coming weeks. So effectively bond yields backing up a little bit as investors look for more compensation for taking part in those auctions in the coming weeks. I think this will be an interesting trend for us to just observe over the next number of weeks to see whether this move up in bond yields is sustained. It's one of the reasons that has supported that rotation in equity markets. But there are a number of other consequences of that, and most notably for governments, an increased cost of financing the fiscal stimulus programs that are working their way through. That brings us on to thinking about where are we with the US in terms of the fiscal support, the fiscal stimulus plan that we've discussed over the past couple of weeks. Again, that remains sort of mired in the politics between the Republicans and the Democrats. So we're no further forward there, but I still firmly believe that that's something that needs to be agreed upon and enacted in the near future. And whilst I did touch on the improvement in retail sales that came out on Friday, the momentum behind that improvement has definitely slowed from the May and June. Now, obviously, we were going to see a strong improvement there, but the month-on-month improvement for July was, I suppose, relatively muted to an extent. So it does illustrate the importance of that unemployment support package that needs to be negotiated through the US in the coming weeks. So we'll continue to keep our eye on that. I think the other thing that was due to happen over the weekend as well was the ongoing phase one of the US-China trade discussions. What was to happen? There was to be a review of how that was going, how implementation was working its way through. As with a lot of other things between the US and China at this point in time, that was postponed. So that will be something again that will may or may not come down the track to hear how that is being perceived from both the US and Chinese perspective. Looking forward to this week, then we'll get a number of minutes from the Fed and the ECB from their meetings in July. We'll also get the flash PMI surveys towards the end of the week, and we'll get inflation data as well. And that inflation data will be useful in helping gauge what are the drivers of the movement in yields within the bond market. Overnight, we've had Japanese GDP for the second quarter. It's come in a relatively low number, falling 7.8% quarter on quarter. But then putting that in the context of what we've heard from other countries in terms of what's happened in the second quarter, it's not that bad in the grand scheme of things. And it gives us an interesting way to compare and contrast different approaches to dealing with lockdown. Firstly, if we look at South Korea and Taiwan, where we had low single digit declines quarter on quarter, to the UK, where we have a 20% decline quarter on quarter. So Japan sitting in the middle. It does just help us think about the approach, so the more targeted approach to lockdowns and the use of technology in South Korea and Taiwan versus the very significant lockdown experienced in the UK. That's it for today. Please join us again tomorrow. Many thanks.